Good morning, everybody. It's the 30th of August. We are Signal Centre Talking Bull. I'm Joe, joined by Jamie and Steve. Good morning, gentlemen.
Good morning, Joe. Good morning, Jamie.
Morning, both.
How was your long weekend?
You're not very nice. Yeah.
Oh, why?
No, yeah, very nice.
Oh, I thought you said not very
I
nice.
thought you said not very nice as well.
No, only won 9-0 at the weekend, so I wasn't really happy about that.
Yeah, no, you
Yeah,
should have beaten the record, really, shouldn't you? To be fair.
Mm,
Yeah,
yeah.
never mind.
Bournemouth were horrible.
Maybe next time. Yeah, definitely going down.
Yeah.
Okay, let's get on with the show then, shall we? So first of all, we're going to go through the latest headlines. Then we're going to take a look at some charts, some interesting price action, certainly on Friday, and we'll touch upon that and how it sets things up for the week ahead. So in terms of the latest headlines, let's do that first. Obviously, we had the Jackson Hole Symposium on Friday, where Jay Powell made his speech, which was obviously much anticipated, and he pledged to pledges sustained inflation fight. He stated that July's lower inflation reading was welcome, but fell short of what is required before the Fed is sure that inflation is declining. He added that benchmark rates at 2.5% is not a place to which to stop or pause the process of raising interest rates. He added that lowering inflation is likely to necessitate an extended period of below par growth, and there are unfortunate costs of reducing inflation, but failing to restore price stability would mean far greater pain over the medium term. As far as September is concerned, Powell stated that his decision will be based on the totality of data since the July meeting. So speculation now that interest rates will be increased again by up to 75 basis points. We saw the 2-year yields reach a 15-year high following his comments on Friday, and markets pared back expectations of Fed fund rate cuts in 2023, with rates expected to stay higher for longer. The dollar surged on the speech on Friday as well. The comments and hawkish rhetoric from other Fed officials saw the dollar post a 20-year high on a trade-weighted basis as it surged against all major currencies, and there was a limited dollar correction from the highs that we saw on Monday. The ECB speculation continues to intensify, with Europe facing increased inflation pressures. Speculation that the ECB will increase interest rates by 75 basis points at the September policy meeting is now beginning to be priced in. And this speculation did provide an element of euro protection. In terms of what's happening with Japan, the finance minister Suzuki stated that the market moves post Jackson Hole are being monitored closely, and there are some reservations over pushing the yen even weaker given the possibility of intervention. The German inflation data is due out this morning. The consumer price data is due later today, with expectations on a year-on-year rate. The year-on-year rate will increase to 7.8% from 7.5%, and just below record highs of 7.9%. So that is out at 1 o'clock UK time today. So that's all the news dealt with. Let's look at the charts. Steve, do you want to kick us off?
yeah, sure. I'll take a look at Bitcoin. Normally start with Bitcoin. And we did see quite a decent move into the weekend, actually. I talked about this bearish outside candle last week, said how important it was in the grand scheme of things and how bearish it was, and was harping on all week about how Bitcoin should move lower. And it waited till the weekend to actually follow through and moved down towards this supportive area we have just below, between around about 19,666 and 17,800. That's the sort of the level of supportive area we've got. Looking at the daily charts, you can see how it broke out of the bigger flag pattern as well. I was looking at this smaller flag pattern. I was talking about all that last week and how it should break down. The measured move target's a lot lower than we got to, but I'll show you that 4-hour chart. But more interestingly, this larger flag pattern has broken. However, a lot of the time you really need to see these other levels taken out, like the bottom of the actual flag post itself. So on the 4-hour chart, this is what I was lining up. This measured move target was looking around about 18,100. We stalled and found a bit of support at 19,500, just below the 20,000 level, and we've bounced back a little bit, so there's maybe room for further upside here. We should find some resistance at 20,800 all the way up to, well, currently around about, or today around about 21,300, and obviously this major level now, as far as I'm concerned, is 22,000 resistance wise for Bitcoin. So yeah, further negative price action. We are getting a little bit of a bounce here, maybe an ABC correction, so like a two-wave correction, and then a three-wave correction, and then further sell-off. So watch that, watch out in the cryptos. On gold, let's jump into the weekly chart as well. Weekly chart formed a bearish engulfing a couple of weeks ago. Last week we saw further negative price action, and we're off to a back foot start this week. And yeah, prices have basically, since they've just broken that $1,800 level very temporarily, it hasn't really looked back. We've seen a really decent sell-off. Actually got down to 17.21 on the dollar front, and we can see here we're still within that bearish channel, which looks really quite solid at the moment. So above we have resistance at 17.65, and we're really looking at this 17.22 level. A break of there should open up a further assault on the 1680 area. That's what that's sort of how it's panning out. We've got lower lows, lower highs, so quite negative on that front, and obviously mainly based around the dollar strength. So as dollar strength continues to gain ground, then we should see gold and silver moving lower as it is priced in that asset. The support on silver is at 18.15. Price action managed to get down to 18.52, so still a long way to go until we hit that support. And again, it sort of did the same sort of thing, broke out the flag pattern, played out nicely, but hasn't actually quite gone as far as we expected to. So further downside in silver. Resistance should be coming in around about 18.92, and really looking for the 18.52 to give way to launch an assault on the $18 level. Crude oil was the one bright commodity last week. This had a really decent rally. We saw it move away from the lows at 85.35. That was on the 16th, 17th of August, and it's had a nice little run up, breaking out of this bearish channel formation and potentially forming a bit of a double bottom here. We've definitely got a close above the neckline. Let me just drive it in a little bit. So let's get the double bottom highlighted, and the neckline would be here, and this is the crucial level really, 94.28 on crude oil. Closed above it on the 24th. Bearish engulfing, or bearish outside candle on the 25th, which is negative. The spike lower wasn't sustained, formed a doji candle, and that would, at the bottom of the trend, that would be a morning star reversal, or morning doji star reversal. So that's a pretty positive three candle formation there. And although it's not come at the bottom of a trend, it sort of like can have the same psychological impact. So yeah, it looks like further upside in WTI crude oil. Let's get a few Fibonacci's on there to look out for. So the first one would be around 99.10, and that would be close to the previous levels that price action stalled on the upside, around about the $101 level as well. That's a significant resistance, and let's see how we get on with those first before we start talking about a deeper move to the upside. Brent crude oil, same sort of price action. I think I highlighted a little bit of a inverse head and shoulders on here, which is at a very sort of like aggressive sloping neckline, and yeah, we've broken above the 99.50 resistance level, closed above there. So for me, that's the same sort of level. You've got this double bottom formation, the neckline at 99.50, and this three candle formation on crude oil. So further upside in Brent crude oil also naturally. That's still trading at around about $6 premium to WTI crude oil. 38.2% fib is a lot closer, 103. Above that, we have the swing highs that we got at $106. And 50% retracement will be 107, but the major one would be 111. So further upside on the oil. Natural gas still hanging about this quite serious resistance level up here. It did close above it on the 22nd, but was shaken back down on the 23rd, and it's been going sideways since. But can't really see anything but further upside in natural gas, which isn't good for homeowners who have to pay their gas bills. 890 support, and we've got the resistance coming in just around $10. Bit of a psychological level there, a break of there, and further upside. And let's take a look at the long-term chart and think about where the potential is. We've still got this this double bottom formation from the 2012-2016 level that has a measured move target all the way up to 1156. I mentioned this a long while ago, and probably a lot of people laughed thinking we wouldn't get up there, but yeah, it's technically that's where it's heading. So be very careful out there.
Nice roundup, Steve. Thank you very much. Let's take a look at some other asset classes then, starting off with foreign exchange. So dollar index obviously been well spoken about due to the impact of Jerome Powell's speech on Monday, and we saw the dollar push up to fresh 20-year highs. So it took out the resistance that we posted back here in July. We saw a small move above it, but then we saw prices close back below that to form, I suppose, a little bit of a shooting star. So a little bit of mixed action actually going on with this, but overall the trend still does remain very positive. We've got these red arrows highlighting still the potential for a double top, but it's still only potential. It needs to do a hell of a lot of work before it completes that. Actually, we need to see a breakdown of 104.68 before we can get excited about that. So overall, still looks pretty bullish. There is a number of resistances above that we need to overcome in order to expect a continuation higher in the dollar index, but clearly it remains quite robust, and no signs of it slowing down dramatically at the moment. So that would have had an impact on anything else linked to the US dollar. This was the Aussie. We saw that rallied into resistance there at 69.91, posting a bearish engulfing candle at the same time, and then prices have been pretty subdued ever since. So looks like we may get at some point a retest of these lows that we posted on the 14th of July, down around at 66.80. If we take a look at Euro US dollar, we did see some decent strength actually from the euro overall, based on the speculation that we think the ECB could raise interest rates as much as 75 basis points. So that was quite supportive for the euro actually. Really wide ranging session here. We went as high as 100.88 before then closing back down below parity. It still appears as if this parity level is acting as a bit of a resistance on the reverse side. Very psychological level, as we've spoken about previously. So we're on the back foot today by about 0.1%, so nothing drastic. It still looks as though that is going to cap upside in the very short term, unless we can break above those highs that we marked on the 26th of August. Of course, if we break below 98.99, then that is likely to lead to further downside over the short to medium term, very much in line with the dominant trend that is playing out here. If we take a look at cable, we can see that that broke down to new lows on the back of Jerome Powell's speech. We posted a pretty big bearish outside day candle on the 26th, and that has led to lower prices. That's the first close we've seen below that 1759 level for some time actually. So we're going back to the lows actually that we posted around the height of the pandemic, is the next major support to target, which is all the way down at 114.10. So we're below this previous support, now resistance at 117.60. That's expected to cap some of the upside in the short term, and ultimately looking for the downtrend to continue playing out, potentially as low as 114.10. If we take a look at New Zealand dollar, US dollar, similar situation to the Aussie, posted a bearish engulfing candle on the 26th. Looks as though it's going to target these lows from the 14th of July down at 60.60. And we'll just take a look at some of the euro pairs because, as I said, they did have a decent move higher on the back of the expectations of ECB moving rates. So Euro Swiss has been one of the strongest downtrends in the FX space, but we've seen maybe some evidence that that is coming to an end and we're going to see some sort of correction. We've seen a break of the short-term downtrend line, quite a bullish candle posted yesterday actually, and we're slightly higher today. So we may see some follow through to the upside. Only expected to be corrective, I think, in the short term, but do be careful with that. So euro yen, let's have a look there. That's broken up through a resistance at 138.39. Yen continues to be very weak overall, and these two are battling it out for the crown when it comes to weakness in the FX space. And euro's winning at the minute. We've seen a bit of a break to the upside there. Let's see if it can hold and maybe start heading back towards those previous highs that we posted back in June. Dollar yen. Obviously, the currency warning from the finance minister talking about them monitoring this potential for intervention at some point. We've spoken about this before over the last few months. We're now back or very close to the highs that we posted on dollar yen, which we did back on the 14th of July. That was at 139.38. So it'd be interesting to see what sort of reaction we get, if any, at that level. Obviously, a break higher would suggest that we are going to continue to see dollar strength and yen weakness simultaneously. If we do get some resistance form here, then maybe we are in the process of forming some top, but we can't rule out the fact that the Japanese central bank may intervene at some point in order to try and strengthen their currency. So do be careful if that is a currency on your watch list. Let's take a look at the indices then. It was a pretty tough day on Friday. We posted this candle here on the ASX 200. We rallied into resistance at 71.34, posting a bearish engulfing candle. Backed that up with further losses yesterday, although we're slightly on the front foot today, up by 0.5% as things stand. Expecting this to do a decent job as resistance, and therefore the bias would be for selling rallies on the ASX 200 for now. The German market, that failed just shy of a 161.8% extension of this small double bottom that we highlighted on the daily chart. It got to the measured move target. It then came up just shy of the extension of that target, pretty much into downtrend resistance at the same time. We posted a bearish engulfing candle on the 17th, and that triggered further losses. And we saw a really nasty candle on Friday. Pretty much a Marabuzu candle. We sold off from the start of the session all the way to the close. Yesterday we went lower, but then managed to recover some of that to close in the green on the session. Overall, looks like we're going to continue to see choppy price action on this with a bearish bias. So do be careful there. Nasdaq, we can see that posted a horrible green candle pretty much into downtrend resistance. We did overshoot it a little. We've got a couple of gaps on the chart to be mindful of. We didn't quite fill this gap actually at 13,240, although we came very close. Before then, the selling took place. We've got another gap that's formed on the chart between Friday to Monday. Came very close to closing this, posting a doji yesterday, so highlighting further indecision. We're up today 0.6%. Can we get above this gap and then maybe make some ground to the upside? That will be the challenge for that market today. Looks like we're into some potential, or close to some potential short-term uptrend support as well. So expecting choppiness overall, but the bias still remains bearish while we've got this long-term downtrend overshadowing the price action at the moment. S&P 500, again, big red candle posted on Friday. Indecision posted yesterday, slightly higher open today as things stand, or that's what projected to happen prior to the open later. We've got resistance now formed at 41.09, so that'll be an interesting test. If it can get there, do the bulls have the appetite to take it higher? If not, it may just be another opportunity to sell into strength and expect prices to move to the downside. Around 39.50 is the next level of support on the S&P. The FTSE has been holding up pretty well overall. It's rallied into some downtrend resistance here, just above a 78.6% fib level. We posted a nasty looking green candle on Friday, and we're having a real go at trying to recover most of that today. FTSE outperforming at the moment, up by 0.86%. So it'll be interesting to see what happens in and around this level at around 75.10. Whether or not the bulls do have the appetite to continue pushing this higher, or whether or not they are just getting out of positions here, or using this strength to get out of positions, and then we're going to see maybe a further tumble to the downside. Still remains a really challenging market, I think, to trade in general. So not my favourite one at the minute, but maybe some interesting signs that things are going to start rolling over to the downside on the FTSE. That'll do from me. Jamie, do you want to take a look at some stocks for us?
Yes, I do. Thank you, Joe. Starting off today with our biggest gainer and loser. Our biggest loser on the screen now is this Azure Power Global Limited, down 44% yesterday. I think this is off the back of, you got Tesla headlines, don't want that, here we go. Let's switch it over, here we are. Down 44% on Monday trading, after saying CEO Harsh Shah resigned Monday after less than 2 months at the Indian renewable energy producer. So 2 months in, he thought, it's not for me. He left, and the shares have plummeted 44% down on Monday. So a pretty rough day there. Our biggest gainer, I thought we were done with Bed Bath and Beyond, but had a nice rally on, that would have been, Monday. Up 24.77%. I doubt there'll be any real news for this. Oh, apparently there is. Bed Bath & Beyond almost 30% on Monday afternoon, as company plans a conference call to provide a business and strategic update on Wednesday, increasing in volume as well. So we're still here apparently, just jumping all around the place. Certainly not a lot to look at there in terms of technicals. There you go, Bed Bath & Beyond. We'll take a look at the stock heat map. So this is actually the heat map for the past week's performance, not just yesterday, because I wasn't here Friday and then we weren't here Monday, so I thought we'd have a bit of a roundup for last week. And you can see it's pretty bleak. Obviously we spoke about what happened at Jackson Hole on Friday and how that sent stocks tumbling, and this is a pretty damning reflection of that. The one sector which I'm sure we'll all be ecstatic that is performing so well is energy, which just seems to be shooting upwards, which is not good for us regular people, especially with winter coming. Take a look. I know we had a request for Tesla, so I'll quickly pull that up. From a weekly perspective, had a look at this earlier. We've got the 200-day moving average here, and on a weekly chart, prices haven't been able to close above it. They've been oscillating around it for the last month or so. But the sellers keep stepping in to defend it, and it looks like they've won, at least for the time being. Also with the 61.8 Fibonacci level, not quite getting touched, but this zone has been holding up really well from a bearish perspective. So that's the weekly, kind of the weekly outlook. If we draw this down to a daily, let's get rid of this. I wanted to bring in this 50 period moving average, and we've also got a bit of support here. This previous low 50 period exponential moving average is there as well. So I think on a shorter term basis, that's probably the next level of potential support. I also wanted to pull up this level, which we've talked about before, down around 249. Oh, look at Tesla, we did a stock split, didn't we? Down at 249, 250. We've got the 61.8 fib from this move upwards, and we've got this previous resistance as well. So they're two levels that, for me, I think we might see some buying. And looking at this as well, you can see the volume's really starting to fall off here. So so about 280 and then 250, they're the kind of zones I'm looking at for bulls potentially step back in. I want to look at a couple more. Check out Apple. We had this really nice run up on Apple. We've talked about the volume, we won't go into that again, but had a really bad end to last week, as a lot of these stocks did. With this really bearish looking outside day on Friday, it gapped down yesterday into this 50 period exponential moving average. Things aren't looking so great here. You can see the volume starting to pick up as well. I think this was actually a 4% down day. I had a little look on Friday when I was out and about. So perhaps a bit of a sell-off incoming. The bulls tried to get back in at this 166 level, but it was met pretty firmly with that Jackson Hole news. So yeah, I'd say this is looking for a bit of a move lower. Where are we moving to? Let's get out some fibs for the move up. We've got this 38.2 fib here, so we're going to probably get a bit of buying at this 50 period EMA, and that coincides with the 38.2 fib. We've got that block of support here as well, which was resistance, becomes support at the 50% fib. So there, I think the next two shorter term support levels, we could see some buying and some buyers step back in. Quick look at Alibaba. We checked this out last week. We had a bit of a squeeze up, which I didn't see at the time, but volume picked up a real squeeze. I don't know what that is. A good few percentages. But already selling off into this week, which isn't a huge surprise, but just thought it worth noting that. We've also got a gap open at this point here too. What else do we have? GME. GME's at the 61.8 fib. Started to get some buying pressure come in, but it looks like the sellers met that pretty aggressively on, well, that was yesterday, wasn't it? So you can see that wick there, but it's still relatively bullish short term. We are at the 61.8 fib and a support level. Maybe we'll get some more buying pressure coming here. A bit of a consolidation at the very least, I'd have thought. Google struggling. Looked like we broke above this resistance, kind of faked a few people out, I'd have thought, before a pretty aggressive sell-off. And then you can see there, volume picking up on that really bearish looking day. Yeah, which obviously not so good. Looking towards these support levels between about 105, 104. That's where I'm looking at on the downside. We'll do two more quickly. We'll fly through. Baidu, again, we had a bit of a squeeze up, hit this resistance level. Have we had earnings out for this? This earnings are out today before the open. So we'll probably check back in tomorrow and see how that gets on, but we're at this resistance at the moment. We've got some gaps open too on the downside. Finishing off with Pfizer, we are back at that pretty key looking support level. We've noted this range we've been in for a long while. I think that for me, this is looking more and more bearish. You can see the bulls are struggling to get back up to this previous resistance level up here. So we got to this support, we rallied, we couldn't even get to where we got to before the sellers stepped in. So that to me suggests that selling pressure is there. And if you look at the volume at the bottom as well, the days that stick out are these big red volume days. So a lot of selling in the market at the moment. If we do get a break of this, for me, I'm just having a quick look, probably somewhere around this blue line. So it's quite a way down at the moment. That would be about 10, 15% I think. So yeah, a fair bit of room lower if we do break through this support level. But yeah, I mean, a pretty bleak week for the stocks. Let's see if we can get a bit of a rebound this week.
Thanks, Jamie.
Thank you, Jamie. Okay, let's move it on to the gun to the head challenge then. Just say thank you to San Hadid for the support on the stream. It's very much appreciated, sir. We'll do our best to keep providing some good content. So yeah, thank you very much for that. Okay, gun to the head challenge. This is where all three of us pick a trade idea live on the video. Each of the ideas must have a stop and a target. All the ideas are placed at market. It is just a bit of fun. We are just coming up with ideas pretty much on the fly and hoping that they work out between now and 9 o'clock this evening, or when the stops or the targets are hit. So we're going to go through those now. We'll just have a quick review of the trade ideas from last week, actually, because we did have something good to talk about, which is always good. Let me just bring those up.
If it was bad, we wouldn't be talking about it.
Well, we always talk about it. They're always here for anybody to see on our TradingView profile. There's no hiding. Everything's time-stamped. It's all done in real time. So if anybody ever wants to check out these ideas, they will be posted here every single day. So we had a trade idea on Ethereum on Friday, and this was a break of a channel looking for lower prices, and that worked out almost perfectly. Just at 9 o'clock, it came up a bit short of the target. Eventually went on to hit it around midnight. So that was a 2.2R return.
Out, Joe?
Oh shit, it is, isn't it? Oh no.
I
looked
looked at that. I looked at that yesterday, and I don't think it was stopped. You haven't moved the thing. Oh no, you can't move it on there, can you?
No, I can't move it. It's time stamped. Sorry, everybody. I was stopped out. I wasn't trying to bluff you all. That was yeah, that's disappointing. But that's the way the game goes, I'm
That's
afraid.
really tough.
Stopped out on Ethereum.
Luckily, the compliance officer's on the show just to
Yeah,
sort of like
thanks,
pull you
Steve.
up on that.
Should keep me in check on there. God. Right. Okay. So that's yeah, that was a stop out. And Steve, you went short of oil. Looking for a small head and shoulders on that by the looks of things. And yeah, you were on side with this by 0.7R at the 9
Phew.
o'clock close. Yeah, no stop out there. So well done to you. One winner banked in anyway. So yeah, back on it today. Jamie wasn't in on Friday, so that was from the day previous. So we've got 3 ideas coming your way now. Anybody got one ready?
I've got one ready, but I'll pass it on to someone who does. The one thing I wanted to comment on was like the stocks for me look a lot weaker than the indices at the moment.
Yeah.
The indices feel like they could have a bounce in them today, but the stocks, looking at the stocks that Jamie just showed us, we're at sort of like quite big levels. And if we manage to get a little bit of weakness creeping in today or tomorrow even, then I think that sort of signifies a proper rollover like you've talked about, Joe.
Yeah.
I mean, these indices can move very, very quickly, and it can have a cascading effect as well, especially if one of them goes. So I'd be like, I really feel like I want to sell the indices, but looking at the stocks, even individually, I think even they look like a bit of a sell. But yeah, I won't go that way. I'll look at something else. But yeah, just wanted to sort of comment on that.
All right, you're talking me out of the stock trades, the indices trade I was just about to do there. That was I was looking at the Japanese index, the Nikkei 225.
Ah,
So
right.
this has rallied into resistance here. So we've got a low from the 24th of August, which we've rallied into. We've also got a 50% fib level in purple there from this high that we posted on the 26th of August down to these lows that we posted on the 29th. So we're rallying pretty aggressively into that at the moment. So I was going to try and sell this as it was into a nice level right now. And I'm not going to be put off by Steve's comments. I'm going to go for it anyway. So I'm selling the Nikkei at 28,268. Is that right? Yeah, 268, and targeting a move down to the swing lows at 774 with a stop loss at 28,368. So looking for just a tad under 5R on that one today. Pretty aggressive, but looks to be a really nice level on the intraday charts for me to have a go at that. So that's my setup for today. So I'll get that published up and promise not to try and dupe people into thinking I've had winners when I actually got stopped out again.
Excellent.
Over to you guys. Steve, you need to share your screen, so we'll give it to Jamie to run us through an idea.
Yeah, thank you, Joe. I'm not going to be talked up by either, Steve, but for me, what happens here is either Joe and I pull off a nice winner, or Steve looks like a bit of a profit. So we kind of win on both sides here. I'm looking to sell an index as well. I'm looking at the Euro Stocks 50. We had this really aggressive sell-off, which we've talked about at the end of last week. And for me, all we've seen is that kind of, it's a bit of a flag formation, but just a bit of a drift that you quite often get after an aggressive sell-off. And as I've talked about before, you can often get that second aggressive sell-off after a period of consolidation. So that's what I'm looking for today. We're running into a bit of a 38.2 fib. It's trying to break above it. For me, we're sticking with the trend, and I think, when you're on side with the trend, it can often, continue. I mean, that's not exactly
Trend is your
breaking
friend,
news.
isn't it?
Trend is your friend. Yeah, exactly. So I'm trading with the trend, and I'm just going to hope we get that secondary sell-off today, and targeting this consolidation area you see on the left side. So that's enough talking. We're looking to sell Euro stocks at current price, which is 3602. There we go. Just adjust that. No, 3602. There we go. And our stop is a little bit arbitrary, but I just want to give it a little bit of room in case this move up does continue a little bit further. So our stop is going to be at 3634, and our take profit will be down here, as I say, at 3476. So if that one does play off today, we're making 3.94R there. So I mean, if we do get indices sell off across the board, things looking pretty good. But also, you know, let's see. I'm gonna stop talking. We're gonna see a sell off. Let's go.
Yeah, I think
Good luck, Jamie.
I think you might be right. I'm sort of, I know I tried to talk you two out of it just so I could get a little bit of a head start this week. I'm looking at Nasdaq, and this is the one I think could sort of like really lead the way. It's got the you know, the big stocks in it, the tech stocks in it. So yeah, I think they could definitely be impacted by what's going on at the moment on the macro side of things. So just a summary. The weekly chart we've rejected. I've drawn a channel here. This channel would have been drawn here. I've adjusted it to sort of take into account this high here. But even if we leave it here, for me, it's sort of like it broke out, false breakout, rejection, and back into this trend. So that might actually look like a better channel, because you've got, if you look at the bottom, you've got like 3 touch points very close on the bottom. So it's a bit more of a solid channel. Let's move that resistance up there then. So yeah, negative on the weekly chart. Daily chart had this bullish channel, bullish correction, and that's broken down. So the daily corrective channel has broken down. Resistance coming in around about the 13,000 level. And if you look on the 4-hour chart, we do have a head and shoulders formation, which we can draw on. This will look something like this. Here's the neckline, head, neckline, right shoulder, and then sell off. So it's a downward sloping one. Broken it. We could get a retest, which would be a move back up to 12,700. This is where I sort of think that the decent resistance, that's the ideal level to sell it, 12,750 to 12,800. However, we can't do this. We're in a gun to head challenge. We've got to sell it here. So yeah, it may not work out for me, but yeah, this is the sort of direction I'll be looking to fade into this. Let's make it expire at 9 o'clock tonight. And I can target a decent move here because, yeah, if we get a little bit of momentum coming in, then this turns out to be a bearish flag. Bearish flag formation. So I'll place the stop at, well, where are we getting in? We're getting at 12,588. I feel like I've got to give it a little bit of room, maybe 150 points to the upside, and I'll be looking for a lot more out of that. I'm going to look at 600 points to the downside. Give me a 4-to-1 risk-reward ratio. So that's my trade idea. Trade for the day, selling Nasdaq at 12,588. The stop is at 12,738, and the target is around about 12,000, 11,988.
Best of luck, Steve. So that's 3 trades that we've posted up today. Very heavy on index exposure. We are looking to sell 3 of them. We've got the Euro Stoxx 50, the Nasdaq, and the Nikkei. So spreading it across 3 different continents as well. So yeah, good luck, gents. Hopefully they play out for us handsomely between now and 9 o'clock tonight. So obviously we are very close to the end of the month. That can create some volatility in markets and make things a little bit difficult, but we'll see how they go. In terms of what we can expect from the rest of the trading session on the news side of things, we've got the German consumer prices, which is the latest reading on inflation from Germany. That's out at 1 o'clock later today, so that will be well watched. And again, could have an impact on what the ECB do at the September meeting, already starting to price in a 75 basis point hike. Then at 3 o'clock UK time, we've got the US consumer confidence number. Again, will be well watched because it's a key metric. As Jerome Powell said, he'll be looking to use all of the data available when coming up with his monetary policy plan. So watch out for that at 3 o'clock. For the rest of the week, we've got the US ISM manufacturing, which will be due out on Thursday. Then we've got the non-farm payroll number, which will be due out on Friday. So really key week for US data and for setting the course on monetary policy as well. Okay, I think that's pretty much it from us today, gents. Unless anybody's got anything to add before we wrap it up.
No, that's all good. Cheers.
No,
Have a
all
good
good.
week. Be careful.
Yeah, indeed. See you all tomorrow. Bye-bye.